Good evening and welcome to another edition of the program Capital Markets. Good to have you join us. I'm Ladi Williams. Let's begin with a review of some of the major equities market outside our shores. Start first with the U.S. markets, which closed Friday's session with a slightly mixed sentiment amid a string of latest earning reports. The broader S&P 500 index was up 0.52%. The tech-heavy Nasdaq Composite climbed 1.58%. While the Dow Jones Industrial Average ended Friday lower by 21.40 points. In Europe, the major market indexes closed lower as investors digested key updates from both the Bank of England and the European Central Bank the previous day. At the same time, auto stocks led losses as new data released showed that new car sales in the UK in January were about 23% lower than pre-pandemic levels. The UK FTSE 100 dropped by 0.17%. Germany's DAX was down 1.75%, while France's CAC index declined by 0.77%. Meanwhile, across the Asia-Pacific, markets were mostly higher as investors in the region shrugged off heavy losses overnight on Wall Street. Hong Kong's Hang Seng Index led gains among the region's major markets. It was up 3.24%. Markets in Hong Kong returned to trade on Friday after being closed for most of the week due to the Lunar New Year holidays. Elsewhere in the region, Japan's market index, the Nikkei 225, recovered from earlier losses, closing 0.73% higher, while markets in mainland China remained closed on Friday for the holidays. And back home at the fixed income market was mostly quiet activity this week for the local bond segment, with average benchmark yields unchanged for most of the 5 trading days, as investors traded cautiously considering uncertainty in the direction of fixed income yields. On Friday, overall average benchmark yields inched slightly by 0.09%. Meanwhile, average yield expanded at the short end across the benchmark for the week, following the sell-off of March 2025 bond, but declined at the mid and long-term segments as investors demanded other positions. Average benchmark yields for T-bills fell by 1.09%. Meanwhile, most of the yield expansion was witnessed at the open market operation space as it edged up by 0.71% amid efforts by local banks to sterilize idle funds. And the unlisted securities market, we see activities of the NASD OTC exchange ended the first week of February in the red as both benchmark index market capitalization recorded a 0.51% decline. Now, at the same time, NASD investors lost 3.24 billion naira in the value, which made the market capitalization to close at 628.31 billion naira this week, in contrast to 631.55 billion naira recorded on Friday last week as a result of a negative movement in prices. At the same time, the total value traded during the week declined by 56.05% as the market recorded a total of 50.60 billion naira against 115.13 billion naira recorded in the previous week. And similarly, total volume of securities traded on the NASD exchange dropped by 61.20% to 1.93 million units, while the total transactions or deals declined 4.35% to 44 this week. And from there, we move to the larger domestic securities market, which ended the first trading week of February stronger in the green as the benchmark performance indicators jumped by 2.33% after regaining the 47,000 points level, which it briefly lost within the week. At the same time, the total value of equities listed on the Nigerian Exchange Limited went up by 579.21 billion naira in 3 trading sessions this week, largely driven by increase in Dangote Cement and MTN Nigeria's share price. Sectoral performance was mixed as the banking, industrial goods, as well as the oil and gas sector index of the NGX ended positive, while the insurance and consumer goods sector declined. On the other hand, equities performance on the activity chart was positive this week as a total of 1.78 billion shares changed hands for 19.61 billion naira in over 27,800 deals. Meanwhile, Briscoe led a pack of 41 gainers, up by 40%. Courtville Business Solutions led 30 about 34 other losers, down by 11.67%, while the trio of Fidelity, Transcore, and GTCO were major contributors to the total volume shares traded this week. All right, for analysis now, we have Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, and the President, Association of Capital Market Academics of Nigeria. Great to have you join us on the show.
Thanks very much, Ladi. It's my pleasure indeed.
Yeah, quite an interesting week at the markets. What's your perspective on the year-to-date performance recorded on the market in just 5 weeks of the new year?
I would say cheering is something that gives hope. This time in 2021, we are looking at just 5.6%. That was the year-to-date return, which was also the month-to-date return for January. But year-to-date return, as we speak, is about 10.6%. And if you're looking at January alone, in January the market did 9.15%. Again, higher than what we saw during the corresponding period of 2021. And also recall, Ladi, that the 5.6% that was recorded in 2021 January, appeared to be the highest that we saw, in that year. And this year again, we are having 9.15. It is hoped that in the course of the year, at least before the beginning of the second quarter or second half of the year, the market should be able to do far more than that, because we know from studies that the Nigerian stock market, does not experience the January effect, where you could say that the January is usually the month with the highest return. So I would say quite impressive performance so far. And if you look at the month of January specifically, you will find that a few stocks have actually powered that growth. Talking about Academic Press with an appreciation of over 88%. Stocks like, apart from Academic Press, you also have, of course, Airtel Africa is also in that category. And Boa Foods. Recall that Boa Foods was listed by introduction in the month of January. And it's recorded over about 33% appreciation in the month of January. So I would say overall, the stocks are doing well. Majority of the stocks are doing well, of course, on the back of earnings, favorable earnings that, we are beginning to see.
All right, but would you recommend, a buy, sell, or hold on stocks for investors, in the equities market at the moment?
One has to be very careful here in terms of recommendation. Of course, you don't just recommend without some analysis, conducting some analysis. You have to look at the fundamentals of these stocks before you recommend. Of course, I would always want people to play in the market. I would always want a situation in which the market is bullish. That means the demand for securities is high. But of course, that has to be done with caution. You will have to be sure that the fundamentals are right before you invest. Well, on a general note, I may not be specific here. On a general note, I think the market is one in which investors should consider. Because if you look at it too, overall, I would say most of the stocks are undervalued. Undervalued, of course, would mean they are ready candidates for investors to take positions in.
Quite interesting, but the month of February has just begun and is having a hangover of strong gains recorded, in the equities market in January. What is your outlook for the current month?
Yes, I expect that the positive sentiments will continue because if you look at what has happened on the average since January, if you use the index as a barometer for investors' mood. Okay, you could say that the investor sentiment is positive. And if you're also looking at the breadth of the market, on the average, we've had more gainers, than losers. I would also say investor sentiment is strong, and I expect that investor sentiment will continue to be positive, for the rest of the month, and maybe into March. And that's because we are still expecting a number of companies to release their, their unaudited financial statements. A number of companies that have done so, actually released numbers that are quite impressive. Impressive in the sense that they are an improvement over the corresponding period of 2021, year on a year basis. So whether you're talking about in terms of those who have released the 12-month financial statements, or even those who have released the Q4 for 2021, you see some improvements in at least the bottom line in earnings per share in particular. I have seen, for a number of them, I've seen that of Airtel Africa, for example. Airtel Africa, released their 9 months, for the period ended 31st December. And it was quite impressive. Revenue growing by about 21%, but profit after tax is growing by over 100%. You also find improvements in leverage ratios. For Airtel Africa, for example, leverage ratio improved, to I think 1.4 times, from over 2 something times. So you find favorable, that's the word, performance on the part of these companies. I've also seen that of May and Baker. I've seen Presco. I've seen Okomo, and you can name them. Those that have really published, those that actually elected the option that the NGS regulatory company gave them. The NGS regulatory company gave the option of either to release your Q4 now, within 30 days after the quarter, or and of course do the annual one after 90 days, or to wait until 60 days before you release the audited annual financial financial results. And the number of companies that have released so far, as I said, the ones I've seen actually released results that are an improvement over the corresponding period of 2021.
All right, Prof. Another major headwind right now globally is inflation. How do you see this affecting the local boss going forward?
Of course, we know the reality. Even for us in Nigeria, domestic inflation rate is high. What returns are we even talking about? I just talked about 9.15% for January, and so far year to date, if you add the return we had this week the market appreciated week on week by 2.31%. So if you add all that, you have, and you subtract the few depreciations we saw, in the course of the week, you have about 10.6% year-to-date return. So even with the 10.6, matched with inflation rate of 15.4, as of the December 2021. So if you take inflation rate at 15.4 and you have a return of 10.6, your real rate of return is still negative. So to that extent, a higher inflation rate will continue to impact negatively on the market. Investors will tend to, of course, on an inflation-adjusted basis, look for some other asset classes that will return, something higher than inflation rate. But of course, Ladi, that when we talk about market return, when I say 9.5, or even take for example what happened in 2021 when we had 6.01% for the market. That's just the average performance. Okay. Now within that performance, you have stocks that, if you like, outperformed the market. Last year, for example, in 2021, for example, you have stocks that returned as much as in the oil and gas sector, for example, the oil and gas index, returned 52% in 2021. And even in January this year, I just mentioned that academic press, did 88%. You had stocks like, Boa Foods that did 33%, while the average market performance was just 9.15. So these stocks outperformed the inflation rate and, of course, returned positive, returns to investors. So when you, what all that means is that any investment must take into account inflation rate, while you're also taking into account the risk, associated with that investment. So in our markets today, we have stocks that are doing well. We have stocks that are outperforming, or if you like, beating the inflation rate that we have today.
Exactly. All right, investors would, want any stock that can actually beat inflation right now. All right, Prof, you hold on now. We'll after the break, we'll come back. We'll have more conversations about the market. That's in a moment. Do stay with us. Welcome back. Still watching Capital Market live on Channels Television. Now, let's look at some stories in the news for the capital market. We start with the Nigerian Exchange Limited, which says it has listed $4 billion federal government of Nigeria Eurobonds on its platform. A breakdown of the dollars-denominated debt instruments, which were listed on Monday, January the 31st, indicates that the Eurobonds were issued in three tranches, which include the FGN September 2028 bonds worth $1.25 billion, FGN September 2033 Eurobonds worth $1.5 million, and the FGN September 2051 Eurobonds worth about $1.25 billion. The bonds were issued through the Debt Management Office, with Chapel Hill Denham Advisory Limited acting as a domestic runner and FSDH Merchant Bank Limited as the financial advisor. And still with the Nigerian Exchange Limited, it has announced plans to set up a technology board to attract more listings from the country's tech sector this year. The Chief Executive Officer of the NGX, Temi Popola, who made this known at the Exchange annual 2021 market recap and 2022 outlook held virtually on Thursday this week, says the exchange is partnering with the Securities and Exchange Commission and other players in the capital market in its bid to achieve the initiative. He mentioned that NGX Limited is seeking to launch a NASDAQ-style board on its platform, which will be called the Technological Board. And moving to another local exchange, Africa's first vertically integrated financial market infrastructure group, FMDQ has been admitted as a full member of the prestigious World Federation of Exchanges after 4 years of being an affiliate. A statement from the WFE says the prestigious achievement of the FMDQ to become one of the over 70 members of the global body indicates the recognition of quality and reliable services it's offered across its FMI value chain. The WFE is the global industry group for exchanges and clearinghouses, representing over 250 market infrastructures ranging from operators of largest financial centers to the frontier market operators. Meanwhile, the exchange has commenced with its own share of developments in the Nigerian financial market, as it has now transitioned from FMDQ Holdings into FMDQ Group PLC. Meanwhile, the Debt Management Office says it has returned the oversubscribed portion of the country's 250 billion naira road Sukuk instrument offered in December 2021. The Director General of the DMO, Patience Onia, who made this known at the presentation held in Abuja on Thursday, says the sovereign Sukuk ended with a subscription level of over 865 billion naira. She explained that the 2021 Sukuk could not accommodate the oversubscription as it was part of the federal government's borrowing plan, which was available in the budget. The DNMO boss also mentioned that the Sukuk had gained investors' confidence as a viable instrument for financing road infrastructure in Nigeria, which is reflected in the incremental growth and oversubscription recorded through last year. All right, let's bring back Professor Waleke there. Hello, Professor. Great to have you stay with us. So far, the market has, received some positive financial results, released by the listed companies on the NGX. Can you give us an insight into some earning results already submitted to the exchange, such as we've seen Airtel, Okomo, Presco, May & Baker, Wema Bank, and Unity Bank?
Yeah, Ladi, I made reference to that, much earlier. I said on the average, you find that many of these companies are reporting numbers that are better than their previous years. If you take Airtel, for example, Airtel's revenue grew by 21%. Of course, the Airtel's report, if you look at it, is in dollars. Airtel is also in operation in East Africa, in operation in other Francophone Africa. So you have the report in dollars. Revenue grew by about 21. But what is interesting to me is that profit after tax grew by over 100%. So if revenue is growing by 21% and PAT is growing by over 100%, it tells you that a lot has gone into the if you like, the management of the company in terms of efficiency of operations. And it also talks about expansion in the customer base. The customer base increased by over 5% within the period in question, at over 135 million, customers. So virtually across the entire metrics spectrum for Airtel, we saw improvements. If you also look at Presco and Okomu, of course, these are two companies in the agri sector, and I'm sure some favorable policies, agri policies of the central bank, are rubbing off positively on these these companies.
Okay.
Which is why you also find that their earnings per share showed some improvement. So,
right.
Overall, again, I would say we have improvements in the numbers, and these improvements are showing up in their share prices. Look at Presco, for example. Presco is now, a few days ago, it was just 74 naira. Today is around 87 naira.
Quite interesting.
Okomo
The prices,
at 142 is still fairly priced. So you find, of course, Airtel. You remember Airtel at some point, went over 1,000. Today it has just gone down to 955 naira.
Okay.
So these performances are showing up in their
the share
stock prices. And
All
for
right.
some of them, especially those with low PE ratios, you could say that they are undervalued. And these are stocks that one should buy because they have potential for further appreciation.
Okay, let's look at another issue now. There's a discussion around the new filing regime by the NGX Regco. Two options were provided going by, a number of corporate disclosures, made this week. Why are most listed companies choosing, option 2, which allows them not to file the fourth quarter 2021 unaudited results, within 30 days, but to file full year 2021 results within 60 days?
The idea is to buy time. The companies are buying time. For many of these companies, they are still really under the impact of COVID. It's not really easy getting their acts together. And so getting out these things in good time has been a challenge. And that's why you remember, it first started with an announcement from the SEC on the 19th of January. Which was followed by the circular from the NGX to all listed companies, giving them those options. It's either they are, releasing their Q4 for 2021, Q4 results now within 30 days, and then they're allowed to release the annual financial reports, the audited one, the AFS, within 90 days, or they don't report the Q4 at all now, but have 60 days to do so. And from what I have seen, going through the corporate disclosures, very many of them are opting for the second one. They're electing not to publish Q4 results now. But I have an advice there. And my advice to the regulatory, the NGS regulatory arm, is to see how these things can be unified. Made them uniform.
Okay.
When you give option, companies will are free to choose those options. And remember, the whole idea of information, releasing information about about a company, is to aid investment decision.
Right.
And that is critical. And that's why that information has to be timely. It has to come out in good time.
Okay.
And there also has to be a comparable basis. Okay. So if I'm interested in analyzing the stocks of, okay, again, back to the companies I just mentioned earlier, in the same sector, Okomo and Presco, for example,
all right,
I should
Prof.
be able to see them, releasing these things about the same time. So if Okomo is choosing option 1 and Presco is choosing option 2, that makes it difficult for me because those documents are not available, at the same time. So
all right, Prof.
I would expect a situation in which the thing is, uniform. Or even if you are giving options, the option should be with respect to sectors, so that it makes easy.
So sorry, Prof.
Analysis of this information.
Yeah, so sorry, Prof. We've run out of time.
So that's my advice to the NGX.
Yeah, that makes so much sense. All right, Prof. Thank you so much for coming on the show. Professor Uche Waleke, Professor of Capital Market, Nassau State University, and President, Association of Capital Market Academics of Nigeria. Thank you so much for coming on the program.
My pleasure, Ladi.
All right, and thank you for watching Capital Market today. Join us again, same time on Saturday next week for another edition. I'm Ladi Williams. Bye for now.